Hey everyone, this is Robert Keynes with goldsilverpros.com. I have a very special guest today. I have the CEO of First Mining Gold, Dan Wilton. Dan, how are you doing today?
I'm very well, Robert. Thanks very much for hosting me for this interview.
Absolutely. It's good to have you on. I know I've been talking with a lot of people about the company recently. It seems like you guys have done a lot to sort of transform the value proposition, so happy to speak to you about that. Before we get into First Mining Gold, however, I wanted to talk to you about some stuff that was going on in the market and get your opinion.
Sure.
So I know that the Federal Reserve has made some very serious announcements recently that have to do with inflation and how they would like to target it and what its impact is. And I know that Jerome Powell even warned about the dangers of having too low of an inflation. So I wanted to get your thoughts on those comments from the Fed president.
Well, listen, I think this is all part of a broader plan of capitulation, right? And I think this is the beginning. As we were kind of chatting before the interview started, I don't think we as society have started having the real grown-up discussion about how we pay for all of this stimulus funding, both monetary and fiscal, that's being put into the economy.
Mm-hmm.
And the need for that stimulus, in spite of record high equity markets, the real economy still needs all the stimulus it can get. So, the Fed abandoning inflation targeting is basically one interpretation. My interpretation would be that they've given up and are targeting inflation as one of the main ways that we're going to get out of all of this debt issue that we're getting into now. So.
I know that gold was recently trading at all-time highs. We popped above 2,000 there for a while, which was great for gold bulls such as myself.
Mm-hmm.
We had a little bit of a pullback now, which I think is pretty healthy because we've had a nice gold bull market dating back to the fourth quarter of 2018. What do you think is next for the metal? Do you have any thoughts?
Yeah, again, I think it's a bit of a healthy pullback. It had run up pretty aggressively, particularly in the time frame from March, April, May, really at the real onset of the COVID-19 crisis. And I think, when people talk to me about the levels that it hit in kind of the $1,900, $2,000 gold market, it caused me to go back and think about, earlier in my career where we've seen times like this. And I have, rightly or wrongly, the benefit of having been doing this since the early 90s. So I've seen a few gold cycles. And this really reminded me, I kept kind of posing the question to people, do you remember, anything really significant about the gold price moves in 2006? Because in 2006, gold went up from, its lows of 250, 260, its kind of average level of 300, which was a real established benchmark. It traded up over 600, 650, which other than a couple of days spikes, had been kind of the highest levels that it had traded at since the 1980s. And if you think, now you talk to anyone in the industry now and ask, do they really remember 2006 as a watershed moment in the gold price because it had doubled off its lows? No, it went from there and it went up 3 times from there, really on the push of what we thought was a pretty bad economic crisis in 2008, but by comparison today, you got to think in 2010, 2011, gold hit $1,900 because people were panicking about, get this, the U.S. government is going to run a deficit of $1 trillion. Right. Could you even fathom $1 trillion? This is a disaster. Well, they didn't even mention the debt ceiling last year when they approved $1 trillion deficit, right? Mm-hmm. Like we were starting this crisis at $1 trillion deficit. And it's terrifying to think about what $10 trillion is. So, does that say gold should go up, 10x from where it was? I don't know. But I think we're in this kind of environment where, you are going to see inflation eventually. And I think the longer you don't see inflation, the more you should be concerned about your own, earnings. And the more you should be concerned about preserving some of your wealth, and the more you should have an expectation you're going to see higher gold prices, because that inflation, once it gets going, is going to be difficult to contain. And by that time, I think it's going to kind of be too late for you to be chasing gold.
Yeah. Talking about the debt, I know that the U.S. is seeing real negative interest rates for the first time, maybe ever in a long time, certainly since I've been following it. What do you think that means for the baby boomers who are retiring and relying on their savings to get them through their retirement?
Well, you'd better be hoping that you have enough savings, number one, which I think if you look broadly at the population, I don't think that's the case. We, at least sitting in Canada as I am, have a bit of a better sense of a safety net, social safety net, which, allows us to sleep a little bit better at night. But yeah, where are you going to find yield in this environment? It's not in government bonds. You're going to have to take risk to find yield. And the last thing you should be doing with your retirement savings when you're in your late 60s, early 70s is, looking to take risk with that amount of money. So I guess, for those of us who are still kind of socking money away for our retirement, would seem to me to be a pretty logical thing to have an allocation of your wealth that's going into something that at least is going to be helping preserve it going forward, right? And that's, having an allocation in precious metals, gold, silver, allocation in real assets. A lot of people who are, will be relying on the value of their home. Generally speaking, real asset prices should maintain or, maybe slightly outperform based on inflation, depending on the asset class. Real estate might be a little bit tough because of the interest rate sensitivity and what's going to happen when, where do real interest rates go when you get into an inflationary environment where you're getting, 7, 8, 10% inflation a year. Last time that happened, interest rates went to 20% to try and tame it, right? So not bad if you're saving, but can be pretty tough on the value of your house if you still are relying on that value to go forward. So I think you want to be diversified. You want to have some exposure to real assets. And I think you want to have some risk diversification with exposure to, gold, physical gold, or gold equities, or, whatever that kind of counter-cyclical exposure might be.
Yeah. Speaking of asset allocation, I think maybe only about 0.5% of assets are stored in gold right now. What happens to the price of gold when people start realizing negative interest rate debt is not a safe place? Maybe, as you said, falling real estate prices due to higher interest rates. What happens to the gold price when, say, a 1 or 2 or 3% allocation moves over?
Well, it's a pretty big and liquid market, but I think you see it move a lot like you would have seen it move in the last couple of years as that allocation's been slowly creeping up. And I think when it gets into the mainstream popular consciousness, I think you're going to see it push up even more. And I think that comes in exactly, the times that we've kind of been talking about, with the gold price coming up off of lows, have a little bit of a pullback here, but this push we've seen in the last 6 to 9 months, I think that's from a little bit of allocation at the margin before it's really kind of come into the mainstream consciousness that people might want to hold a little bit of, be it physical gold or be it other gold exposure through equities, producers, developers, or whatever.
Okay, switching gears over to your company, First Mining Gold. I have from my notes that the company's done some pretty big things. You found ways to JV the Spring Pole, Goldland, Pickle Crow, and create a silver stream. Can you explain those transactions and why they're beneficial for your company?
Sure. To take a step back, we kind of started 2020, optimistic, but without a whole lot of cash in the till. And, we know that we have the solid value of this unbelievable portfolio of gold projects. And Spring Pole being the biggest and we think the most valuable of them. At the beginning of the year, we were really looking for ways that we can ensure the long-term sustainability of our business, and importantly, get us to some of those real value milestones. And for us, that meant getting Spring Pole through the permitting process, through the environmental assessment process, because there is a perception of a permitting challenge around the development plan, which involves building a couple of small cofferdams. and dewatering part of a lake for a period of time while you mine the deposit. So this has been done in a lot of other places. We don't, the science that we've collected says, we believe we can do it without any significant negative long-term impacts to the environment. But we need to continue to progress that. But from the beginning of the year, with a focus on that, there were a couple of really important things. Number one, we needed to focus our capital on moving that forward and getting to those milestones. Number two, we had to make sure we had enough capital to get us there. And number three, for our other projects in a rising gold market, we needed to make sure that those projects were attracting sufficient capital, both human capital and financial capital, enough to move them forward. So that kind of started, we'd been approached by a group in late 2019 with a great track record for exploration. This is the team at Ateco Minerals in Australia. And the same team had been involved with a company called Bellevue Gold, where they'd gone into an old past producing gold camp and in a very short period of time delineated a 2 million ounce plus very high grade resource just through quality exploration, and they're very, very good at what they do. So based on that success, they've been looking around the world going to find where the next project was. And they came to us. They were looking in Canada. They identified the Pickle Lake camp as really one of the most prospective but underexplored camps in Canada, particularly for high-grade gold, which was their specialty. And our project Pickle Crow was the one they wanted to start on. It was the largest past producer in the region. So we struck a deal where they're spending $10 million and giving us a bunch of cash and shares to earn into an 80% interest in the project. And lo and behold, it was mostly kind of share driven. It was a 5-year time frame. Investors looked at it when we announced it and kind of yawned and wondered why we're giving our projects away. Well, you fast forward to today, Ateco has a 200 million market cap, then their only asset is this earn-in deal. So they get to 80% of the project. That kind of implies about 50 million of value to us. Plus, when they complete their phase 1 earn-in, we'll have 125 million of their shares, and the phase 2 earn-in, another 4 million of cash, plus a royalty on the project. So I think we're in a great position, but most importantly, have a great partner moving that forward. But that really gave us, as that was coming together, we go from that, we finalized that deal in March, just at the onset of COVID, like the COVID shutdowns. And so we went from there to a real focus on how do we make sure that we have enough capital to get Springpole to the end of that permitting process. And we've been talking with royalty and streaming companies for about a year, and there was a lot of interest, but it was difficult to get a value that we all would agree on, because obviously we had a different perspective of the risks involved in the development and permitting of Springpole. So it turns out I'd kind of raised it with Keith Newmeyer, who's our chair, and the CEO of First Majestic. I'd raised it with Keith at one point in February and kind of said, well, you're in the silver business. Like, what would you pay for a silver stream like this? And that innocently started a conversation that progressed to, us getting the silver stream, providing First Mining with 22.5 million US of funding, in staged funding on development milestones. So 10 million up front, 7.5 upon completion of our pre-feasibility study, and the last 5 once we get our federal or provincial environmental approvals. So to get those in place, that gave us all the money we needed to make sure not only could we advance the project through its milestones, but we could hold the company and hold the rest of our projects. So that was all the money we needed. Didn't give us a lot of cushion, but that was all the money we needed. And then in addressing the rest of it, one of our biggest exploration spends over the years was Goldland. And Goldland's a great project, but happens to sit next door to the Goliath project inside Treasury Metals. Goliath is about 1 million ounces. Goldland's, 1.7, sort of open pittable. Goliath was further advanced in development studies. It had its federal environmental approvals, and it just made so much sense to put these two projects together, where ultimately it'll be 2 mines feeding 1 mill, much lower risk, much lower capital overall, more robust project, and there's still a ton of exploration upside there. So we put that deal together over the course of May and announced that in early June, and Treasury subsequently raised $11.5 million, and it should have an economic study done on that combined operation for the first time in hopefully by the end of the year. But that's, I think, going to demonstrate a really, really robust 100 to 150,000 ounce a year producer in one of the most buildable places on the planet, I think.
So speaking specifically of Spring Pole, I see it has about 4.8 million gold ounces and about 24 million ounces of silver. It's a pretty big resource to get excited about. Can you give us an idea of what your timeline may be for development of that project?
Sure. Yeah. So we've been in the environmental assessment process in Spring Pole since the beginning of 2018, which is important because these processes take time. So right now we're wrapping up a pre-feasibility study. So we put out a preliminary economic assessment on it, an update in November of last year. And that demonstrated a very robust project. And that's where we kind of get the numbers that we quote on at $1,500 gold after tax net present values of 1.2 billion US. So this is a big project, all in sustaining costs in the low 600s. Reasonable capital number. It's about $800 million to build this big mine and all the infrastructure. But in the context of other deposits of this size, that's a pretty manageable number for the groups that would really benefit from this size of production. Because one of the real differentiating factors here is that Spring Pole has an average annual production in its mine life of about 400,000 ounces a year. So if this were producing today, this would be the third largest gold mine in Canada. Like, this is big enough to be meaningful to anyone. And, if you don't have a project that's kind of going through permitting right now, I think the probability of that project producing before 2030 is pretty limited. So our timeframes are rounding out this pre-feasibility study at the end of the year. It might be early in 2021 by the time we get it published. We have our terms of reference, which is basically the table of contents for our environmental impact statement, in with the regulators right now. We expect to have that approved by the end of the year, submit our environmental impact statement kind of by the middle of next year. And that starts what in Ontario and Canada has been a pretty reliable 18 to 24 month permitting process. So we think, as we go through that, we're in active dialogue and in active consultation with our Indigenous communities around the project, who are very important stakeholders to us, and moving those discussions forward as we get to better understand the economics. I think the PFS is going to be a really, really important document for setting the stage for how we move those discussions forward with our Indigenous communities, our other stakeholders, really get, work and establish that social license, which is critical to the development. And I think what we've seen now with just about all the field work done for the environmental impact statement, we're very confident that this project is something that can get permitted and will get its environmental approvals. So with that, it sort of sets the stage for in 2023, we have the flexibility to do more engineering work and a feasibility study while it goes through that permitting process. But in 2023, we expect to have those federal and provincial environmental assessment approvals. And that's the really key value milestone. Projects with those, other projects you can find in the market today, in single asset developers would trade at, kind of 0.5 to 0.7 times their net asset value. And historically, when you go back to look, companies in robust gold markets tend to get taken over at or around that 1 times that net asset value by producing companies that are trading at multiples of their net asset value. So I think that kind of lays out a bit of a runway. The real decision on that value and how we move the project forward. Do we find a partner? Do we raise the capital, build it ourselves? Do you sell it? I think that's really a discussion for once we've done what we can to take the risk out of the business. But we have all the funding we need now to get there, and we have the team to get there as well. So we're pretty excited about it.
Yeah. Looking at the company's financial statements is important to investors in understanding, is there true value in the company to invest at this stage? So I'm seeing that your market cap's about 330 million, according to my notes, while you have cash and securities amount to 250 million, and a potential current prices of over $2 billion in assets in the ground. It seems to be a pretty big value opportunity for investors. Could you speak to that?
Listen, I think it's a huge value opportunity. I think you've just articulated why this is such a great investment opportunity.
Mm-hmm.
But, you know, part of it is when we had the portfolio of projects, when you couldn't point to the value of a Pickle Crow, you couldn't point to the value of a Goldlund,
Mm-hmm.
investors were giving us zero value for that. So I think at the beginning of the year, we had about 120 million market cap, and that was a value for Springpole. And then the rest of it was the I don't believe you factor.
Mm-hmm.
And so I think we've managed to, through a couple of these transactions, demonstrate that there is value in the portfolio of projects, at least in the ones that you can now say that's worth share times share price, right? Or that's worth, you know, project interest times their market cap. So you know, I think from that perspective, we've been able to really demonstrate that the rest of the portfolio has value, but it still leaves Springpole, and the chart that you're looking at in our investor presentation really tells it. It
Mm-hmm.
still leaves Springpole as the biggest value lever inside the company. And if you really believe that you're going to be able to get this project
Mm-hmm.
to that point of de-risking where you have the social license and the permits to build it, it's going to be worth multiples of where we are right now. This is a really strategic asset in an industry that just doesn't have projects like this to build. And if we don't know where it is today, it's probably not getting built in this decade.
Okay, last question for you. What's the most important thing that we haven't touched on about First Mining Gold that you'd like to stress and share with the viewers?
Oh, you know, I think we've hit on most of the top points. I just would kind of bring people back to, you know, the risk reward in this investment has radically changed in the last 9 months. You know, we were sitting at the beginning of the year with about $5 million in cash and a big drill program at Goldlund that we had scoped, and we needed to figure out how we were going to get the money to move the projects forward. We're sitting today with liquidity of, you know, $60 million plus,
Mm-hmm.
and project value that's, you know, a significant proportion of our market cap, you know, is, I don't know if it's 2/3 or 3/4, but that sort of tangible value. One thing we didn't mention is that our intention is with our Treasury Metals stake
Mm-hmm.
to distribute a bunch of Treasury Metals shares and warrants directly to our shareholders around the time of our AGM, the middle of next year. So, you know, that was important for us to get our ownership below 20% in Treasury. But importantly, to give, you know, all of us who are shareholders, and I'm a big shareholder of the company myself, having bought, you know, significant amounts of stock over the course of almost 5 million shares over the course of the last 18 months. Yeah, to give us direct exposure to what we think is going to be a really exciting development opportunity at Treasury. So yeah, I think it takes a little bit of digging. We've tried to make it a little bit easier for people to see kind of what the hidden value is, kind of unhide the hidden value a little bit, but I think there's still lots of room for us to continue to grow and surface that value here as we continue to de-risk Springpole. So I encourage people to keep watching. And if anyone is looking for more information, our website's a great place to go, www.firstmininggold.com.
Absolutely. We'll put links in the video description as well. Thank you, Dan, so much for joining us. Appreciate it. The CEO of First Mining Gold.
Thanks, Robert.